Welcome to today's Silver Log. The date is the 8th of June 2011. And in this video, I'm going to quickly talk about Bitcoins to start off this video. We'll take a look at the daily chart and then take a look at some inflationary data. So we'll start off within the Bitcoins, and this is only going to be very quick. I don't know what to take about these things. They don't seem as if they really have coins. Again, I don't know, but they use the word Bitcoin. So when I first heard of it, my general thinking was, I guess this is coins that are small, and hence the word bit. And I'm really looking into or wanting to buy 1 gram, 2 gram, 5 gram, 999 silver. The premiums stop me from doing such a thing. So I wasn't too sure what they are, and quite frankly, I'm still not too sure because it was about a week and a half or so ago, maybe 2 weeks ago, where I was given a message. Oh, here's the charts for the bitcoins. Can you put them up? And I looked at it. The markets were going up pretty big. It's up about 1,000% since the August breakout. So it's been up quite a large chunk, and I tried to find information about what they are. I was not able to do it. And from experience, whenever this happens, if it's hard to find the information, then there's something up with it then. So I'm not really too interested in it. There's a poll on the blog which is asking if you're interested in bitcoins or not. There's only been 10 votes so far. Two of them are people interested within it. 8 not, or that of 80% not interested in them. Myself, I don't want to get into any type of currencies much anyway, which is why silver is the only one. We'll talk about that later on for me, because the play is not really on silver, it's on the inflationary aspect. Again, I'll go over that at the end of the video. Let's talk about this daily chart. There'll be 3 daily charts. This one in here shows this range, day number 25 today within this range. That's all I need to say about that, other than it's boring. The longer in a range, the bigger the breakout or breakdown tends to be. It's between the 50-day moving average, which is roughly around 40, and this Fibonacci mark, which is exactly $33.58. Yesterday's volume was the lowest volume that we have seen in quite some time. Today's volume is very small so far to start the day off. It's a little after 10:30 as of the recording of this video. And within this chart here, the Fibonacci is from this high and this low, or the August breakout, $33.58. It's been finding support there. What will happen is if we come down here, I'd be a little concerned that this area would be support, but not much of support. Most likely finding resistance at around the 36. If that happens, watch out, meaning we come down here, maybe we come up to 36, and then that would be the breakdown. And the most likely target is you have this 200-day moving average, as well as this Fibonacci mark at around $26 per ounce. To me, it doesn't make sense how the supply and demand should come down to this level, but when the world's as insane as it is, sometimes sane thinking will not get you that far. As far as trend lines are concerned, we are right at this trend line. This is on a logarithmic chart that connects the August lows with the February lows, and just by staying with the correction through time will violate this uptrend. For the market rally to come to a halt, it needs to go below this level here, which is the 2/3 Fibonacci retracement. If we switch it up to the last 50 candles, the Fibonacci mark is from this high and this low. It is still yet to have gotten above this level, which has kept the market overall within a bearish trend. Within this bearish trend, the 18-period averages are very flat, thus it makes the market neutral. The market has been neutral pretty much since it here, and that's now 1, 2, 3, 4, 5, 6, 7. We're talking almost about 2 weeks of this market being in a neutral point of view. for it to get bullish. It's really got to break this significant resistance here of around 39 for it to get bearish. It needs to have a confirmed breakdown below the 34 level. And it's really not silver that I'm making the play on. It's more of that of inflation. And silver is just one of the products that you can get into to protect yourself against inflation. This chart is the 5-year chart. Each candle representing 5 years worth of inflation, how much your dollar has lost since 1776, somewhere in that area there, 77. And it's above this upper band. Well above this upper band. And whenever people talk about things like, well, what's going to happen if we have hyperinflation? Do you think we will ever have hyperinflation? It's almost a pet peeve of mine. It isn't, but it's almost. And I say that because when I look at this chart, really, if hyperinflation probably got going in here, which would take us down to about 1970. That's when hyperinflation really began, but that's when it was noticed. Really, it began here, which was roughly when the Federal Reserve came into play. And when the Fed came in, the inflation levels, well, everything was going sideways, and then boom, the market goes higher. Now, if you ever think that there's no such thing as up too much, well, or things can't go up forever, I don't know about this right now. As far as trend lines are concerned, let's just draw this baby in. There's no reason to think that inflation's not going to continue. Now, we're seeing on here how resistance is now becoming that of support. And all this means is that the rate of ascension has gone higher. So instead of drawing this trend line, I can draw a trend line with a higher rate of ascension. Now these numbers, one of them, the earlier part comes from measuringwealth.com. The higher parts are from approximate shadow stats levels. After all, if you're looking at CPI inflation or CPI, then you're using inaccurate data. The inflation numbers, quite frankly, are not correct. Now, if we just move this on now to a yearly situation and draw a line right at 1913, because that's when the Fed came in. Things were going really fine as far as inflation was concerned. It'd go up and down, but it would go up and down. Then the Fed comes in, they lose a lot within the currency. Then the depression got the currency down lower. Since then, it's been nothing but an upward ride, and it's just kept on going higher and higher and higher. That's why I'm into silver. It's not because I like silver, although I've definitely become fond of it, but because currencies have lost a lot of value. If you look at the prices 100 years ago compared to today, that's why I've been thinking we have been in hyperinflation for almost 100 years. Take care. Bye-bye.